Can you still see the main screen okay?
Yep.
Good, eh? Just the green edge has gone on it.
All right. Yeah, hi Simon. I can actually see there. I see your text too. Can you see the going carbon neutral first slide? Just want to see whether that's getting out to the rest of the world. Okay, we get good. Thanks, panelists. Look, I may as well get started. Other people can join as they come in. So, welcome everybody to, I think this is the fourth Builders Declare webinar. As we almost come out of lockdown, so feeling a lot more free now and looking forward to the weekend coming up where I can get out of the city. For those of you who've been watching some of the other webinars, you'll probably realise that I am not, in fact, Simon Clark from Sustainable Homes Melbourne. I'm filling in for him, though I notice he is logged on, so that's a bit sneaky of him. So, first of all, I guess I'd like to just introduce today's topic by saying that there's a lot of buzz at the moment in the sustainability area. Like probably in the last 20 years, this is the time when there's the most talk and the most hope, I guess, for the future. There are countries who are signing up for going carbon neutral by 2050. Australia's yet to do that, though we have signed on to being 26% reduced by 2030. So we do have some impetus there. But just talking, yeah, there's NatHERS is trying to bring up NatHERS whole of house. Green Building Council of Australia are trying to bring out their own version of a carbon zero for homes. And really, I just get the sense that more and more people have already assumed that we have to go into a low carbon future. And it's just a matter of the gears grinding and moving in that direction. And so that's very heartening for me. But one of the dangers that we have with hopefully moving into that low carbon future is credibility and greenwash, and that sort of derailing the process and you know, selling things and making claims that aren't true, and people just becoming despondent with the whole enterprise. So that really leads into today's topic and the importance of having that credibility by getting certified by other people and by really walking the talk, not only in the product that you offer, but also in the business that you run, for those of us who run businesses. So Danielle is going to talk about going carbon neutral for builders and building designers, really any company in the building and construction industry. I've known Danny for quite a while now in various on various boards, and also just at different trade shows, and me and her have come across each other a fair bit. So Danny definitely knows what she's talking about. I'm really excited to find out myself, because I'd be interested in getting Positive Footprints accredited as a carbon zero company. So without any further ado, I think it's probably time to hand over to Danielle and to find out what it takes to go carbon neutral and get that certified. All right, Danielle, take it away.
Thanks very much, Jeremy, and thanks Builders Declare for putting on this session. Just before I start, I'd like to acknowledge that we're probably all meeting on a variety of lands today. I'm located in Bayside, so I'd like to acknowledge the original inhabitants of this land, that are the Boon Wurrung people of the Kulin Nations, and I pay my respects to their elders past, present and emerging. Right, so in this session today, we'll cover off what carbon neutral actually means, why it should matter to you and your business. Then I'll talk about the different ways that you can get to carbon neutral and touch on things like preparation, because there is a bit of that, the process, and it is a process, and what's involved with that. We'll also be talking about, as we go through, I'll give you some information on time and cost commitments, and then we'll cover off just basically the benefits as well. So I guess the big question really is, why does it matter? I'm sure many of you already know why carbon neutrality matters, but let's just have a quick recap before we get into the main thing. So as you all know, climate change is the biggest threat we're currently facing. Unfortunately, it's taking a bit of a backseat to COVID, but it hasn't gone away. Scientists are united, impacts are well understood, and governments have been working on mitigation strategies for many years. And yes, it is actually getting hotter. So this image here from the World Meteorology Organization and NASA shows that just over the last 5 years, this is the difference in how much different the temperature is relevant to 1982 to 2010 for that period. And 2016, of course, is the warmest year on record to date, which is well over a degree C higher than pre-industrial periods. So, and 2015 to 2019 has actually been the warmest period ever. So this is a major problem. It's contributing to our planet, our home, and everything is just starting to overheat, as you know. So it's resulting in more extreme events like cyclone, drought, fire, flood, and globally have been steadily increasing to the economic and human impact can be quite devastating. So I'm just going to enlarge this image. You'll see just here the economic and human cost of these events across the globe. In the Americas, these events have contributed to about $376 billion of economic loss and over 4,100 deaths. In Asia, for example, we're looking at the numbers of $16.6 billion of losses and over 7,400 deaths. And here in Australia, between 2015 and 2019, we've experienced about $5 billion worth of economic loss and about 300 deaths. And that doesn't include the 2019-2020 bushfires, all due to extreme events caused by climate change. And we're seeing the impact regularly through more intense cyclones, heat waves, floods, droughts, fires, and even health problems. I don't know if you remember, but you'll probably recall that the smoke from the fires in New South Wales blanketed Sydney in December and January for weeks. The air quality index at the time measured Sydney's air quality 12 times above hazardous levels, making it the world's worst air quality for quite a number of weeks. And it increased hospitalisations because of respiratory issues by over 10% across the state. Now, impacts of this are felt almost everywhere, from a global scale to here at home, and that all impacts us personally through things like heat stress, events like fire and flood, especially if it's in our own area. Some of these result in food shortages. I don't know if any of you noticed, but certainly last year and the year before, I certainly noticed in supermarkets, there were signs up saying that some products weren't available due to climate events impacting the food chain. And it's not going to be the last time we see that. There's also come with it an increased business risk, which is actually becoming more and more prevalent, especially in the bigger organisations, due to climate events. And businesses are now having to include climate change risks in their risk registers, which is particularly impacting superannuation funds. You might have heard someone just got recently sued. Councils have been sued recently about it, and financial institutions and insurance companies. And it's impacting the building sectors in certain areas through bushfire regulation changes, costs to build, and even the option of purchasing insurance in certain areas is now cost prohibitive or simply not available in some high risk areas. So the impacts are now affecting most Australians at some level, and it's up to everyone, not just governments and big business, to take action. And we can all be part of that solution. For example, in the property sector, many companies, including yourselves, I think have started to look at taking action or are already taking action. Lendlease, for example's approach is, and they've been doing this for many years now, we aim to create a future where people and communities prosper. And they have been focused on sustainability in their major residential and commercial sectors developments for quite a few years now. Fraser's Property have released their A Different Way strategy for more environmentally responsible property, stating that our changing world demands a different way of doing things. And they've just recently certified one of their developments as being Climate Active certified, which is an interesting one. Mirvac have been working on sustainability, and their This Changes Everything strategy sets out clear targets to ensure they continue to have a positive environmental and social impact. and to make choices in the way that they do things. And weirdly enough, REA Group announced in October the launch of their climate change policy and a commitment to going carbon neutral within the next few years. And I think by being part of initiatives like Builders Declare, you guys are also standing up to be counted and have a commitment to take action, which is really good. So let's talk about carbon neutral and what that is. So being carbon neutral basically means having a balance between the carbon you emit as a business or whatever it is that you do and what you're absorbing from the atmosphere. So you're basically neutralizing it. And you do that through measuring your emissions, reducing what you can, so that you reduce your emissions like energy use, reduce your energy use, and then you offset what's left, because there's always going to be some component that you just can't stop. It's part of doing business. You have to use electricity, you have to use fuel. And so for those things that you can't offset or reduce any further, then you offset. Now there's a lot of terms. This is the only really texty slide I have, you'll be pleased to know. But I'll put this in just in case anyone wants a copy of this presentation later. At least you'll have the terms handy. So being carbon neutral is all about balancing the emissions that you emit with the emissions that you absorb. Net zero or net zero emissions is often talked to be the same as being carbon neutral. It's about achieving a balance between what you emit and what you absorb. You'll also hear the term climate neutral. That's actually a United Nations initiative to try and encourage everybody to take action and to go carbon neutral if they can in their home by doing their own footprint in their business or encouraging their businesses to do the same. Now, a carbon account or a carbon footprint or inventory is basically an inventory of the greenhouse gas emissions that are emitted as a result of your personal, company, building, precinct, country, product, service, or event, whatever it is that you're measuring. Now, the five greenhouse gases, as you probably know, water vapor, carbon dioxide, methane oxide, ozone, and nitrous oxide, and chlorofluorocarbons. Now, the ones that you hear the most about is CO2, which is carbon dioxide, and emissions. All of those are piled together in a carbon footprint or an inventory and called basically your emissions. And when you look at doing tons of emissions or the way it's measured, it's always expressed as CO2 equivalent, which is basically a financial instrument, and it's tradable. Now, the emissions boundary is another term you will hear as I talk through this. That's basically where do you draw the line, what is included and what is excluded from your carbon account or your inventory. Scope 1, 2, and 3 are different categories of emissions that will be in your inventory. And they do that to make sure that double accounting is avoided. So scope 1 will include key things like things you're directly responsible for, like fuel for your vehicles. We'll cover this off in a minute. You'll also hear the term carbon credit or offset. Now, a carbon credit or an offset is a permit generated by an organisation or a country for storing or avoiding emissions. So one carbon credit is exactly the same as 1 tonne of CO2 or carbon dioxide equivalent. They are financial instruments, can be traded with organisations and countries that generate emissions to offset them. And you might also hear the term carbon positive, which there are no standards around at the moment, but it basically means offsetting or generating more than you actually emit. So if you've got lots of solar on your roof and you're generating and putting out, I don't know, 15 kilowatt hours of power into the grid every day and you're only using 5 in your home, then you're carbon positive in your home effectively. So it provides benefits, additional benefits by removing greenhouse gases from the atmosphere. And as I said, there's currently no standards on how much you need to generate or offset, but that is actually in the pipeline and it will probably be coming in the next few years. There'll be a proper definition of what it means and what you need to do to achieve or to be able to say you're carbon positive. Now, there are a couple of standards that are relevant to becoming carbon neutral. The standards that all carbon neutral calculations and claims need to be made against are pretty much these 3 here. The Australian Government's Climate Active Carbon Neutral Standard, which used to be known as the National Carbon Offset Standard or NCOS, it's been rebranded last year. This is in line with the Greenhouse Gas Protocol and the ISO, which is the International Standards Organization standards. There are a few differences, mainly to do with emission factors, but they're pretty much the same thing. The standard can be downloaded freely from the Climate Active website if you want to have a look at it yourself. The Greenhouse Gas Protocol is actually the world's most widely used greenhouse gas accounting standard, and it provides a framework to measure and report your emissions. It actually does contain several substandards that work together to form the overall protocol. So you'll have to look and pick and choose which one's relevant to you. The Greenhouse Gas Protocol can also be freely downloaded from their website. The other one is the Carbon Trust Standard, which is probably the most widely recognised international carbon accounting standard, mostly used in Europe. Don't see it much in Australia, but it is available and you could use it if you wanted to. The other two standards here, ISO 14040 and 14064, will need to be purchased if you want to see them, but the key items are actually embedded into the Climate Active Carbon Neutral Standard, the Greenhouse Gas Protocol, and the Carbon Trust Standard. So don't bother about buying those unless you particularly want to, but do download whichever one of those you're interested in. In Australia, the Climate Active one is the one that's most prevalent, just in case you wanted to know which one to look at first. Now, there's a few different pathways to achieving carbon neutral. In Australia, they include Climate Active certification, which is the most highly regarded and trusted certification, but it does take time, it is a process, and it does take financial investment. The other way, there are some independent third-party carbon neutral certifications available, which are generally a bit cheaper, but again, they take time. There is a financial investment for those as well, but they're usually a little bit cheaper because they don't have the quality demands that Climate Active has. And then there's also a self-certifying method, which is a bit of a confusing term because you can't actually say that you're certifying yourself, you can make a claim. So self-certification means that you need to choose the standard that you want to certify against, so the Climate Active one or the Greenhouse Gas Protocol really, and create your own or do your own carbon neutral account and inventory using the relevant emission factors. It can be complex if you do it yourself, but you can do it and you can avoid external costs other than the offsets. At the end of the day, it's all about what you want to claim, what you want to market, and if your claim actually holds credibility in the marketplace. So for example, the Climate Active, the Australian government's Climate Active certification meets really strict standards. They're independently validated and they're transparent. So anyone looking at it after it's done can be sure that the claim is real, it's accurate, and it's true. And other bodies that provide certification that do the same thing are generally well regarded. So if you find another certification body that does independent validations and make sure data is transparent, then they're usually pretty okay. The ones that don't get independent validations that you need to question, I think. So certification through organisations that don't independently validate the source data and are not transparent, they just don't have that extra layer of accuracy and confirmation. So it's really up to the individual looking at the label to determine whether it's valuable or not. And in terms of self-certification, as I said, it's not really a certification, it's actually a claim. So you're basically claiming that your business is carbon neutral yourself. You can add credibility to the claim by using one of the standards, getting a data validation. We'll talk about all this in a minute. And any certification should be transparent about your emissions, your offsets, and which standard you've used to comply with. So as I said, it ultimately comes down to what you want to claim and do you want a credible logo. So here's some examples. The Australian Climate Active certification, as I said, is the most reputable. The carbon accounts are validated and assessed. The emissions have to be publicly stated in a public disclosure statement, and not everybody wants to have their business's emissions publicly disclosed. So if you're one of those people, then Climate Active is probably not for you. If you'd like to see some examples of what has to go into their disclosure statement, just jump onto the Climate Active website, have a look at some of the companies that have certified, and every single one of them will have a public disclosure statement on there. And that has a bit of an overview of what the organisation is, what it does, why they've gone carbon neutral. It has information on what their carbon footprint was and where it was. It also tells you what offsets they bought and any other benefits that might have come from that. The example in the middle here, the green one, the carbon neutral product certification, is from actually the only other Australian company that does certifications is called No CO2. Similar certification body, but they don't have requirements in terms of disclosure and validations that Climate Active has. So they are in Australia, they can do carbon footprints for you and they can do certifications, but they're just not as widely recognised or as valued as the Climate Active one is. And you can also use the International Carbon Trust one if you want, that's around as well. The third example here, with the one with the tree, is one that was actually made up by a company who's self-certified. There's absolutely nothing wrong with this. The only downside of it is it should actually state which standard it was certified against. And ideally, you should be able to find more information on that on their website, which might well be there to say that it was independently validated to confirm the numbers. So as I said, it comes down to the credibility of what you want to claim and what you want to market. But one thing you really must be aware of, Climate Active and all these groups, and particularly Climate Active, No CO2 and any other company that certifies, are very, very protective of their logos. So you won't get the logo, you won't get anything until you've been signed a license on how you're going to use it. And also be aware that the ACCC, the Australian Consumer Protection Group, does have rules that apply to come, and if any companies are found to have made a false claim or are using logos inappropriately, then you can be prosecuted and heavily fined. So it's basically beware of the greenwash. Don't get caught up in that. So I'm going to focus most of this on Climate Active because that's what I've just put my company through, and it's the one that's most people would be going for. So these are the different types of certifications that you can go for. Most will do an organisation certification. So there's a small organisation category now, as well as a medium to large organisation. I'll talk about that a bit more in a minute. Fees will differ a lot, and they do increase as the size of the business and emissions increase. There's also products and services that can be certified, but they generally require a life cycle assessment to be completed and all emissions offset to claim a carbon neutral product or service. And you do have to have the organisation certified first before you do that. And that again, so you end up with two separate certifications. You can also certify events and precincts. You might see that City of Melbourne sometimes put on carbon neutral events, and they do that through Climate Active. And I'm not too familiar with that process, but they certainly have to cater even people's travel into the event when they do it. Now let's talk about the buildings one. There is a certification for buildings at the moment, but there's currently only two pathways for them to be certified carbon neutral by Climate Active. And that's through a NABERS whole or base building rating, or as an extension to Green Star performance rating. So if you're looking at doing something like this for a residential build at the moment, or a mixed use build, it's not likely to be able to go through Climate Active at the moment. There may be a path for buildings that don't have those sort of ratings or aren't relevant for those sort of ratings going to be developed in the future, but it's just not currently available. I was talking to Jeremy earlier about eTool, and eTool can provide like a carbon neutral, or can tell you at least how much carbon you're using for the materials in your build. And eTool are actually in discussions at the moment with Climate Active about how to make that work for things like residential properties if people want to do it, but it will be a few years away, I suspect. But saying all that, you could still make a building net zero emissions by doing a carbon inventory of the energy use and offsetting it annually. So once you've decided which type of certification you want to go for, you need to think about your emissions boundary. So this is where you draw the line and where you choose what's included and what's excluded. For builders, this particularly matters because you can define the boundary that to your organisation operations only and exclude the product you build, for example, the houses you build. So it makes things a bit easier when you're only looking at your operations and not the 6 houses or the 2 houses that you might be building and having to take all that into account as well. So it makes it more manageable. It provides the potential to offer carbon neutral additional services at a later date for those who might want it. But it's a good starting point to just do your organisation first. And you can define that boundary based on operational control, financial control, or there's an equity share one, which I haven't seen used, but it's out there. And when you're looking at what to include and exclude, there are certain mandatory emission sources that must be included in the organisation boundary. Now, just to give you an example, all stationary energy and fuels used in the building for the machinery or the vehicles under your control, for example, gas, fuels in generators and vehicle fuel, must be included. all electricity consumed by the building, the machinery, oops, sorry, I've doubled that up. Other parts, yeah, all the electricity has got to be included, and all other emissions which are within the control or influenced by the business getting the carbon inventory done must be assessed for relevance. So they've got a thing called a relevance test, and there's 5 questions that if you get 2 out of those 5 you say yes to, then it's considered relevant. For example, are the emissions from the particular source likely to be large, relevant to the organisation's electricity, stationary energy and fuel emissions? So if the answer to that is no, then you go on to the next one. So just about anything that you've got in your business that contributes would need to go on through the relevance test to do an emissions calculation. So what do they measure? The standards provide the framework for calculating the emissions, and it breaks them down into what's termed as scope 1, 2 and 3 emissions. Now scope 1 is direct emissions from your activities like company vehicles and so on. Scope 2 is indirect emission, and it does include electricity, heat and steam. Not that you'd have much heat and steam, but you certainly have electricity. And scope 3, this is where it often becomes complicated, because scope 1 and 2 are pretty easy and straightforward to get from your business, but the scope 3 side of things covers upstream and downstream emissions, which includes purchased goods and services, transport for employees to and from the office, freight, postage, waste, business travel, flights, accommodation, and so on. So it can get quite detailed, and all of that together will make up your organisation's carbon footprint. So in terms of the data that you would be required to have to hand for this sort of thing, some of the data is taken from the profit and loss statement, which is pretty straightforward. So as long as you've got those particular emission sources specified separately, it's pretty easy to pick up. Other data like energy use, fuel and accommodation needs to be provided in specific formats. So energy data needs to come in either kilowatt hours, or if it's gas megajoules, or if it's diesel fuel for generators, litres. If it's fuel for vehicles, litres of fuel by type. So if it's a diesel vehicle or it's a diesel truck, you need to know it's a diesel truck, it's a large vehicle, because emission factors differ depending on what size the vehicle is and what fuel they use. Things like business travel and accommodation is varied because it depends again on the level of accommodation that you're in. For example, if you stayed in a 5-star hotel, has a different emissions factor to a 3-star hotel. And if you're flying as well, or driving, depending on what you're doing, how you're getting there. Also includes train travel and public transport. For employee commute, you also need to look at how people get to and from your office. Do they drive? And if they do, how many kilometres do they do? What size car do they drive? Or if they take public transport, how many kilometres do they do? Freight and postage can be done in either kilometres or dollar spend, but it's usually best in kilometres travelled if you can get that. The tricky one is waste that we've found. A lot of people have different types of, like they'll run an office and their office will either be using the council waste collection or it might have a special paid one. There is actually a waste calculator that through Climate Active they provide you, and it basically gives you some estimations on bin sizes and how often they get collected, and it comes up with an average emission factor. A lot of these things are as best as you can get. A lot of them are not 100% accurate, but the whole idea is to get it as accurate as possible. So it's just worth keeping the information requirements in mind and ensuring that you capture or get the relevant data before you even start looking at doing a carbon inventory, because getting the data itself or finding out, you know, kilometres travel for employees is not always so straightforward. So I'll just talk through the process. So the first bit, you'll need to decide if you're going to do it yourself or if you're going to get help from a carbon accountant or another organisation to put it together for you. I'd recommend, certainly for the first one at least, get some help if you can, because there's lots of different terminology and rules. If you've got time to do it, excellent, give it a go. But be prepared, you've got to read standards and find emission factors and things like that. Then you'll need to decide which carbon standard you want to work with. I'd recommend, if you're here, go towards the Climate Active standard, or if not, the Greenhouse Gas Protocol. Either would be fine. Sort out your emission boundary, so where you want to draw the line, what's included, what you want to exclude, and find your emission factor sources, and prepare and calculate your carbon inventory spreadsheet. Now, this is where a lot of time comes in, deciding what you want to do and which standard you want to take is not that difficult, but once you've start looking through your emission factors and trying to find factors that are recognised and meet the relevant standard, that's what takes a lot of time. With Climate Active, they will provide you, we'll talk about the Climate Active process in a minute, but they will actually provide you with a spreadsheet with all the factors in it. Greenhouse gas protocol, you'll need to source them from their factors, which are just different. So just be aware that particular part can take weeks to do. I'd also recommend, once you've done your footprint or calculated your emissions, to, if you can, arrange for someone independent to review it to make sure that what you've done and that you've validated it, to validate the carbon account. Quite often it would be a certified practicing accountant, or you could use, if you've done it yourself, you could use a carbon accountant as well to check it over for you. Because it's always good to make sure that, especially on the first one, that things are set up correctly, because then you're not carrying forward mistakes or errors or missing things out going forward. So if you do that while you're waiting for emissions to be validated, or if you don't do that, the next thing to do then is, by then you'll know where all your emissions are, and you can start developing a reduction strategy, like how can you reduce your emissions in that particular sector. You'll know by looking at your carbon footprint that fuel or energy or whatever it is your highest emission sources, so tackle the big ones first and develop a reduction strategy. And once you've done, if you get a separate validation, once you've confirmed the calculation is correct, you can go out and purchase offsets to neutralise your emissions. And then after that, I would suggest you would create a public statement, just saying whatever you want to say, but the more transparent you are, the more credibility it will have, and say that you're carbon neutral. But you have to be very careful that you're claiming it, not certifying it. Okay, so just be careful with the language. As mentioned earlier, the ACCC are keeping a close eye at the moment on greenwash. So you don't want to end up getting fined or anything like that. There's enough of that around already. Now, the Climate Active process is a bit of a process. Like anything that's worthwhile doing, it's not easy. So the first section of this is actually to really, you have to register and obtain a license agreement with them. So most formal certifications, including Climate Active, saves you a lot of time in a way, because you do need to ideally have a carbon accountant for this one, at least for the first one, and someone who understands it to assist getting all the relevant documentation together, doing the inventory, getting the validations, sorting the relevant paperwork out and getting it submitted, which is why most businesses would hire a carbon accountant or a registered consultant, and there's a list of those on the Climate Active website, to prepare the account. You'll also need to work through the process and submit the claim. But you can actually do it yourself if you want to. Just make sure you've got plenty of time to do it. And the process, the timeline for getting Climate Active certification takes about 6 months from start to finish for it all to happen. Okay, so just so you're aware of that. So first, register and obtain a license agreement from Climate Active. This can take a couple of weeks in itself, because you have to email them, they'll send you a form and then you sign it and send it back, and then they'll send you the license agreement and so on. This covers the use of the Climate Active certification logo when they give it to you at the end once you do get certified, but it also provides you and your consultant with a carbon inventory spreadsheet to use for that carbon account. And they do change each year because the emissions factors in them change every year. And those spreadsheets that they provide are really, really useful, because that then means you don't have to go find the emissions factors. So it contains all the required information and the emission sources that need to be accounted for. And they also give you a what's called a calculator, an external calculator, which allows you to put things in and calculate things like waste. And you also need to use it for your energy use. So that'll take a few weeks. And then the next step is to find your boundaries, like which sets the approach for your organisation. And that will set, if you're going to go Climate Active, that will set it going forward. So make sure that you set it in a way that you want it to be. So for your organisation, and they're usually identified through ABN numbers. So you select which operational control you want to do. Most people use either operational or financial control approaches. Once that's defined, you'll need to then start collating all the required data and getting it into the spreadsheet and calculate your emissions. So completing that spreadsheet will take time, and this is actually where quite a number of weeks can pass by without you realising it, because you find something, you find you don't have it, you've got to chase it up, it comes in a week later and so on. So once that footprint is done and complete, then those spreadsheets that they give you will total it up and will give you your total emissions factor. So once that footprint's completed and you know what your total emissions for your business are, then you can then you need to organise independent data validation of the source data for the inventory. And this is something you have to do in Climate Active. It's not a choice. So depending on the size of the organisation and which category or Climate Active category your business falls into, a certified practicing accountant should be able to do it. Or if you're in the really large business format, you may need a registered consultant. Okay, it's definitely an external cost, and it does very much variable depending on the size of the business and what they need to do. Now, this validation needs to be done on the first carbon account. It doesn't have to be done again unless there is a material change, for example, if you merge with another company, to your carbon footprint or your boundaries. And the purpose of it is to ensure that carbon source data is correct at the start and therefore should be correct going forward. So they basically check all the invoices for your energy, all the data that you've collected for your fuel usage, etc. And they make sure that it tallies up and adds up and that you haven't missed anything in your carbon footprint. Okay. Now, if your business doesn't fit the small organisation category, you'll also need a technical assessment which validates that the inventory is correct and that the data has been entered correctly. So a registered consultant is required to do this, and again, costs vary widely. It's required on the first carbon inventory account and again every 3 years. Okay. So while data validations and technical assessments are happening, one of the things you can use that time for, to try and keep the time shorter, is to set up your emissions reduction strategy. Because in your public disclosure statement that you're required to submit for Climate Active certification, you have to include a emissions reduction strategy and be prepared to implement that to reduce emissions for the next inventory. So once the carbon inventory and the emission figures are confirmed, you can then go out and purchase offsets. Now, offsets will need to meet specific criteria for Climate Active, and they can vary very much in price. For example, you can buy carbon offsets from anywhere from $2 to $45 a tonne. So that's a huge variance. If you've only got 10 tonnes to offset, it's not such a big deal. Did some work with a client, you'll see in a minute. They've got 2,500 tonnes to sort out, so they could be looking at anywhere from $5,000 to over $100,000 depending on what offsets they choose. And it's not like going out and getting a t-shirt off a shelf. It's buying an offset is basically investing in a project, and we'll cover that in a sec. So once all that's done and you've got your offsets, you need to create or finalise your public disclosure statement. If you're working with a consultant, they'll be working on this as you're going through. Template is provided from Climate Active and it must remain in that template. You can't change it. And if you use a consultant, they'll also provide you with a carbon report. So you'll get the public disclosure statement and you'll get a carbon report, which is basically the inventory in a way that you can read it and understand it, and a whole load more information on carbon reduction strategies. Then all that documentation, including the inventory, the data validation, the assessment reports, the proof of the offsets and the public disclosure statements, is then submitted to Climate Active, who will then review it. And once it's approved, they'll send you an invoice for the fee, and the fee is based on what your emissions are. And once that's paid, you'll get the logo and you can market your carbon neutral status publicly. Just be aware this validation can take up to 6 weeks to come through. So don't go and plan marketing announcements or anything too early, because it could take some time to come through. For example, I lodged mine for my business 3 weeks ago and I haven't got it yet, and I don't expect to get it for another couple of weeks. So just be aware of that timeline. Now, in terms of costs and things like that, certification for Climate Active is probably the most expensive. Going through a third-party organisation would be a little bit cheaper, might not have the credibility. Self-certifying is definitely the cheapest way to go to start with if you wanted to. So just be aware of the time and cost commitments. So as I said, it's a process, and with Climate Active or any of these standards, just by the way, they also work on either financial year or calendar year. So in terms of time period that you need to report on, it will either be the financial year that you choose, which will either be the current financial year or the year before, or the calendar year. And they do take 6 months. Now, just on the subject of offsets, They are basically an investment in a project. So they're not a product or a thing that you just go and buy off the shelf. So you'll need to consider what type of project aligns with your business ethos and values before you can purchase them. Now, these often have other co-benefits like social impacts as well as environmental benefits. So just have a good look at what's around, but also do be aware there are also some dodgy carbon projects out there. So ensure that you choose one from a reputable provider and that the credits are officially removed so that they can't be resold, because there has been problems with some unscrupulous providers reselling carbon credits to more than one person, which is not good. So what you should do is when you get an offset, they should give you a serial number and you should get confirmation that the offset has been retired. I'll happily answer any more questions on this in a minute when we get to the Q&A. Now, just in terms of case study, now this small organisation is my small organisation. It took about 8 months from the day I sent the registration form in to now, and I still haven't got the thing through, but it's partly due to a lot of changes that were happening at Climate Active. I had most of the data. It was pretty easy for me to find. So I have ended up making some chart of accounts adjustments so that next year when I do it again, it's easier for me to just pull data off the profit and loss statement. My carbon footprint was 6 tonnes for my business. It would have been double that if I had not been buying carbon neutral power. So for my business, I've been buying carbon neutral power, electricity and gas for some time through PowerShop, and that's a certified Climate Active product. I also offset my flights when I fly anywhere, and that's a carbon neutral certified product too. So the emissions from that would have added up to about another 5 or 6 tonnes. And because I offset them or use those products, they came off my footprint. So my total footprint for the year was 6 tonnes, and that included my vehicle fuel, etc. Now, in terms of costs, there are 4 different fees that you have to pay. So the industry cost, had I hired someone to do this carbon account for me, it would have cost me probably around $5,000, which I just think's high, but that's what I was getting quoted, just because I put it out there as an interest thing. The independent data validation, I found my chartered accountant did that for me. He's now offering this service, and he did it for $600, but I've been told that that's a lot more expensive out there, quite high. The Climate Active fees were only $820 because they've introduced this new small organisation category, which is for businesses, and we'll talk about the criteria for that in a minute, which is for businesses that are small, under 30 people and so on, so that it makes it more attractive and more affordable. And my offsets, I bought $22 offsets, and I bought 2 lots. So my offsets were $236. So had I paid for doing someone to do my footprint, I would have had to pay about $6,600 to go through the whole process and get certified. Because I did it myself, because I am a carbon accountant, it cost me $1,600, and that for me is affordable. However, I've also have another client who's in the mediums organisation category, and this is their sort of costs. So you can see it's quite a bit different. It took quite a bit of time to get the data collected because they had 100-odd employees, and we had to do staff surveys and get travel data and everything from that. And we got stuff from the P&L and energy bills across 3 different sites. The carbon footprint was 2,589 tonnes of emissions, which was much higher than we thought it was. And that threw them into a different bracket in terms of Climate Active carbon fees. So their inventory was about $9,500. Their independent data validation, which we got the best price they could get was $1,500, was done. Their technical assessment, they're looking at pricing's coming in at the moment around 5.5, but I think they can do better than that. We're just waiting on that. The Climate Active fees for lodgement, because their emissions are over 2,000 tonnes, are going to be $7,985. Now, if those carbon emissions, like the priority for this particular one for the next 12 months is going to be to get those carbon emissions below 2,000 tonnes, and we can do that reasonably easily. But doing that will drop their Climate Active fees from 7,000 down to 2,600. So you can see there's quite a big difference in the amount of emissions that they do. Now, to buy 2,500 tonnes of offsets, they'll probably go for a mid-range one, which will cost them around $15,000, or they could just buy ones that are $2 each and get them at $5,000. But if they went for a mid-range one that's $6 or $7 each, they'll be looking at $39,000 odd to get certified, which is a lot of money for a company. I mean, they're a big company and they seem to be happy to pay that, but it's not something that your average small to medium-sized business would probably want to take on, particularly in these times. So the small organisation criteria, which is, I think, a cost-effective way to do it, has this criteria. So you need to have a carbon footprint of less than 1,000 tonnes of emissions. Now, that's hard to know or to gauge until you've actually done a footprint, but you can usually get a pretty decent indication. You have to have an annual turnover of less than 10 million and gross assets of less than 30 million, less than 30 full-time employees, and you have to have 80% or more of your emissions for your business out of the small organisation emissions boundary. And these fixed emissions here, so accommodation, air transport, cleaning, electricity, food, etc. These are the emissions that must form 80% of your emissions boundary. Anything else that's not picked up there will be picked up in what they call an uplift factor, which means anything that's not there, for example, at the moment, it doesn't include vehicle maintenance, but I understand they'll probably add that in soon because there's only been about 3 or 4 companies go through this. This is very new. So we'll be giving them feedback on how well that goes down with businesses and what should or shouldn't be added in the future. So that's the category. If you think your business will fit into that category, then you could probably get it done reasonably expensive. If you think it's going to go over, or if you have more than 30 employees, then you'll definitely be in the bigger organisation category and the fees will be higher. But of course, I appreciate that getting carbon accounts and going carbon neutral, especially after seeing those prices, for some people, it's going to be a really big ask. And I don't want anyone to go away thinking that it's all too hard, because it isn't. It's just a process and you've got to be committed to it. But here are some alternative ways that you can move towards that and start getting things in line to move that way. So the first thing I would say would be, if you haven't already, set up some sustainability policies and targets, put them online, and that for a start just demonstrates that you're doing something and it's on your radar as a business, which is important. People that are out there looking for other businesses to do this will look for that sort of thing, you know, when they're looking for businesses to work with. You can then also create a sustainability action plan, which you can align with your policies and targets that you set to say, okay, well, we'll do this by this date, this by that date. And one of those targets, I hope, would be to go carbon neutral by 2030. You can then review your procedures to see what else you could do easily and what you can extract from your profit and loss and other record keeping systems in terms of collecting data in preparation for doing a carbon inventory. So if you're falling short in some areas, create a way to easily and consistently collect the data that's needed. So for example, fuel receipts, if you can retain fuel receipts and track the litres of fuel purchased as well as the costs in a spreadsheet or something similar, that's what I've ended up doing. That makes it easy to get the data at the end of the year. And then you can also do things like start with, you know, once you've done all that, start with a carbon inventory that's focused on just scope 1 and 2 emissions, because they should be fairly straightforward to do. And you should have that data to hand fairly easily or be able to get it fairly easily. And then what you could do is you could offset that and then publicise it while you're preparing and deciding to go to the full Monty with going full carbon neutral and scope 3 emissions at the end of the day. So I think, you know, just putting it on your radar, saying, okay, let's start getting some things sorted out. Let's set a plan in place. Let's start looking at how we can monitor this. Start with baby steps, and I'm working through a business actually right now that's doing just this, because the going carbon neutral for them through certifying process was just too cost prohibitive. But it's a way to get going, and it starts to prepare you for things, and you can do it yourself up to a certain point, and then you'll need to get some help. So just a reminder of the benefits. You know, people think, geez, it's a lot, but it is becoming really, really important, because it does make you part of the solution, not part of the problem of climate change, which to me is really important. It does differentiate you from your competitors, and it provides marketing advantages through improved reputation. So, and it can also contribute to winning business where sustainability credentials are actually requested. Like I know that we've recently got 2 tenders with local councils because we are a certified benefit corporation and we are going through the climate active certification. And I know that's part of the reason we got those tenders. So it's always good to keep that in mind. It provides leadership in your sector, and it puts peer pressure on others to keep up as well. There's not too many builders out there. In fact, I don't think I know any that are actually certified carbon neutral right now. There are a few carbon neutral products, but not actually certified builders. So it also reduces costs by driving reductions in emissions, which can impact your costs. For example, if you find that your energy costs or your fuel costs emissions are high, reducing your emissions will also reduce your costs in that part of your emissions and carbon footprint. It also helps to meet growing customer expectation and stakeholder expectations, and including and attracting staff, bringing more customer loyalty, and it does create a lot of goodwill. It also mitigates the risk of possible future regulation and carbon taxes. I mean, I don't think carbon taxes are likely, sadly, but it does help reduce risk. It does demonstrate that you're doing something on climate action and helps you to future-proof your business. So more and more businesses and consumers are preferencing companies that are part of the climate solution. Achieving carbon neutral certification does show that your business is taking it seriously and is taking action. But it does, it does help in the meantime, because there's not that many out there that are carbon neutral certified, but that is definitely growing. I know from talking to the Climate Active team over the last 6 months doing the work that we're doing, we've seen a significant increase in the amount of interest in businesses going carbon neutral, and Climate Active have seen, I think, 150% increase in the number of businesses registered and wanting to do it. So it's really starting to grow. So climate change and global warming, it's not a prediction, it's happening here, it's happening now, as you know. We do have the solutions available. We also know what needs to be done. We just got to get on with it. So I like this slide. So the words from Barack Obama, we didn't come here to fear the future. We came here to shape it. And going carbon neutral is one of the ways that you can shape a better business. You can hook into changing values and you can contribute to a better environment. It is a journey. It's not particularly easy, but it does matter and it can be done. And if we all pledge to be carbon neutral by 2030, then we will be making a difference and we will be part of the climate solution going forward. And that pretty well brings us to that. So that's pretty well what I had time to cover today. Finally, one of the things that I thought about was doing some sort of deal or something. It's a bit hard to know how to price carbon accounts when you don't know the business you're pricing it for. So instead we've decided we'll offer a 10% discount for any Builders Declare or Green Building Institute members if they want any carbon accounting work done through us in the future. So thanks for coming. And are there any questions, Jeremy?
Yes, definitely are questions.
Thanks
very much. Thanks very much, Danielle. You've done a lot of homework there, and that's really good because I don't have time to sort of get my head stuck into all of those issues. But that was really well outlined, I thought.
Did you understand it? Because I know
no, I definitely understood it, and I think
there's a lot to it.
There's an expense there, but there's also an opportunity, and sometimes having a little bit of a barrier to entry really helps those who are leading to make the most of the good intention that they've done to get to that carbon neutral certification. Yeah. I know also Architects Declare have been pushing really hard for getting their architects to be carbon zero as much as possible. So any builders who get the certification, I'd be sort of going to a lot of those members and saying, look, I'm a carbon certified builder, and you might get your foot in the door with a lot more.
One of those clients is one of those architects, so there you
go. Yeah. Okay, let's ask some questions here.
Yep.
Got a question here about when you get up to the stage of offsetting with the carbon credit. It says, do you need a climate active account to sell carbon credits? Maybe they're asking here about the people who are selling the carbon credits. Do they need to somehow be certified as official carbon credit company by Carbon
Active? They do. Carbon credits are actually a financial instrument and a tradable financial instrument. So they are regulated through, you have to have an ASIC license, financial license to do it.
All right. So
ones out there though.
Is there something that is there something that we should be looking for, or we should be asking that question? Are you certified through ASIC or?
Oh, look, they'd have to be to be able to trade. Look, there's a couple of companies that I know that are pretty good. Like, for example, I bought my offsets through a company, a WA-based company called Carbon Neutral, confusingly enough. But they are one of 4 or 5 companies. I did a lot of research. It took me a while to track down who I thought was reputable and had good offsets and would give me serial numbers and all this sort of thing. And made sure that they retired the offsets so they weren't reused. But I went with, mine were bought through Carbon Neutral in WA. I chose to invest in a project which is reforestation of some of the desert areas in WA to help with wildlife and things like that. There are other Australian projects, and you'll hear them termed Australian Carbon Credit Units, or ACCUs. There's a company called South Pole that sells those, and they're pretty good. There's a few other companies around as well, but you can even buy carbon credits through like savanna burning projects in Queensland and things like that if you particularly want to support Australia. The cheaper ones tend to be overseas in places like Africa and India and China, where they're doing things like investing in wind farms or supporting, you know, cooking stoves. There's quite a few cook stove ones out there actually, because apparently that was causing quite a few environmental problems. So quite a range. I mean, just get onto the Carbon Neutral website or to South Pole or any of those and have a look at what different projects there are. There's a huge range, but you definitely want them to be, with Climate Active, they have to meet certain criteria, and that criteria is outlined in a guide that they've got. And if anyone wants it and can't find it, just let me know. I'm happy to send it on.
Got it. Okay. So basically, if you went and chose a dud, Climate Active wouldn't give you the certification.
No.
Yeah.
No.
Okay. Got it. I've got a question here just about green power. It says, do you recommend purchasing 100% green power or 100% renewable energy? Which is more cost effective in terms of Climate Active certification? Maybe I was under the impression that 100% green power is 100% renewable.
It is.
Yeah. So maybe they're asking. I know that some electrical companies do 100% offset versus green power. You know, there's a difference between the green power.
There is a big difference. Like PowerShop, for example, all of the power, all their electricity and all the gas they sell is carbon neutral certified through Climate Active. So if you're using them as your retailer, then all your electricity would be zero emission in your carbon account. They also sell green power. And if you buy green power through PowerShop, for example, then you pay a premium for that, but they don't have to offset it because green power's got no emissions. So that's, but you can buy 100% green power through any other provider. It doesn't matter who it is. If it's 100% green power and it's on your bills, so it's verifiable, it will be zero emissions in your carbon footprint.
Okay. And Sue just wants to qualify something. Does Climate Active certification include emissions related to our building sites?
No. If you define your boundary so that it's just your organisation, it only covers the operations of the organisation, not the sites that you're building on. So it won't cover the materials, it won't cover anything to do with the actual product that you're building. It will only cover the organisation.
So I had a question that sort of follows from that. I've got carpenters on staff.
Mm-hmm.
And they own their own cars. We don't have like a company fleet. Mm-hmm. But do I have to take into account their petrol getting to site, or is it just okay? So it's to and from work. To and from the workplace, regardless of where the workplace is. Yeah. Okay. Ross asks, if we are serious about the commitment to fighting climate change, given the setup and calculating costs, are we better to just invest purely in carbon credits and rehabilitation projects than a certification until it becomes more affordable? What are your thoughts on that, Danielle? Look, you could do that. Just make sure that the way you're calculating and there are companies doing it. They're not, there's not many of them doing it, but there are a couple out there. Mostly charities and not-for-profits that do it because they don't have the money to go for certifications like this because they are quite cost prohibitive. But yes, you could do it. And the way to get credibility out of it is to make sure that you're transparent, that you comply with one of the standards and that you use recognised emission factors throughout the thing. Okay. And just say you get certification, how long does it last for? 12 months. And at the end of 12 months, what do you need to do to recertify? You need to do another footprint and you need to recertify. And the costs each year should get cheaper. The first year is always a bit of a hit because you've got to have that independent data validation. And if you're a medium or a large organisation, you also have to have that technical assessment. But the data validation is usually just done once and then you shouldn't have to do it again. And the technical assessment is once every 3 years if you're a larger organisation. I've got a question. Is the current working from home situation considered in the emissions calculations for organisations?
At the moment, no. This is one of the big talking points with climate active and organisations that are certifying at the moment. How do you take account of that? Even in I do a bit of work with City of Melbourne, even they were trying to work out how to counteract that, but there is no standards at the moment. However, given that the workplace is definitely going to be changing permanently as a result of COVID, I mean, a lot of businesses are saying they're only likely to have between 50 and 80% of their staff back on site and this sort of thing. So there will be definitely a contingent working from home, and there is a need to identify how do you allow for those emissions that that person's having at home using their computers and whatever else they're using. That's actually being looked at now through the federal government and their climate active scheme. They're looking at how they can trap that and make a reasonable assumption without, because you want to make it fair. You don't want to over egg the pudding, so to speak. One of the ways I thought they could do it was because all the energy distributors in the country know how much power is being used on average by each household in each suburb, right? So they could say, okay, well, pre-COVID it was this, post-COVID it's now that, it's gone up by 2 kilowatt hours a day or whatever it is, and they could maybe do some calculation on that. I don't know. But yes, it's in consideration. It's not accounted for right now.
Right, okay. Well, given that we've been going for an hour now, I'll probably start to wrap it up. Daniel, how can people find you if they want to go down this process and take up your generous offer?
Well, I'm at Green Moves or through the Green Building Institute, but I'm usually responsible for the Green Moves one. That's the business I do the carbon accounting through. So it's dking@greenmoves.com.au. Have you still got the slide up or is it down?
It's down, but I've just put it into the chat.
Right. So yeah, they could just email me or call me or come through the website. That's fine. And let me know that if you're a Builders Declare or a Green Building Institute member, then we'll apply a 10% discount for you. We're in the process now of sorting the costs out. The indicative price I had there from businesses that I got quotes from, I thought was too high, personally. So if I'm doing a small org for a business, it'll depend on the business, but it'll probably be around depending on the size, but it'll be cheaper than that. And then my discount. I'm going to have to, now that I've done several of them, I can work out an average of how much time it took and work it out.
Yeah. Look, personally, like I was saying before you started, we're looking at bringing out a range of carbon zero homes. So I know that's products aren't yet available for small builders. It's only organisations that can be certified. But
big buildings really at the moment.
Yeah, the big buildings. That's right. But when and if that came online, that would definitely be something very useful to have on the marketing. All right.
The talk you did the other month on net zero homes was really good, and that's one way that you can showcase a building that's at the very least been designed to be really efficient and hopefully depending on occupant use, of course, net zero possibly.
Yeah, that's right. I mean that's always a good bit of marketing and a good bit of credibility if you build homes that owners are raving about because they don't have high bills. That's really good stuff.
Now, I don't know if anyone's familiar with the B Corp as well, because Benefit Corporation is another certification you can get as a business. That's not easy to get either, but it doesn't require. Oh yeah, it does require a lot of data, but it's about $600 or $700 a year to certify. You recertify every 3 years, but it's I don't know if anyone's seen anything on that, but if you Google B Corporation, you'll find that it's a whole process about how the company works holistically in terms of sustainability and social justice and all that. And that's just another option to carbon neutral if you want to look at certifications to showcase, to show that you walk the talk or do what you say you do.
Okay, so that's B Corp.
It's Benefit Corporation. If you Google B Corp or B, if you just Google B Corp, if you can't find it, let me know. But it's we've actually got a page about it on our website. We've been certified for 4 or 5 years now, and it's a whole network of like-minded businesses that work together, have events, so on, similar to Builders Declare.
Excellent. Well, we'll definitely check it out. So Danielle, I'd like to thank you on behalf of Builders Declare for coming along today and uploading this information to us all. So that was really comprehensive and well covered, I thought.
Thank you. You're very welcome. And as I said, anyone's got any questions, feel free to send them through. I do have copies of all those standards that I talked about on my files here. So if anyone has trouble finding them or hasn't got time to look, just flick me an email and I'll send them back to you.
Yeah, there was a question, can we get the slides, please, by somebody? So maybe if they have any particular information or particular slide thereafter, contact.
I'm happy to give people a copy of the slides. The notes aren't with them, but the slides will be there, so that's fine. Which is why I did that, you know, what the terms mean at the start, because it's useful to, you know, have the clarity around some of those, because it can be a bit confusing at times. So I'll PDF the slides and I'll send them to you after this.
Yeah. The other thing we do, Danielle, and for those people listening, is in a couple of weeks, we put it onto the Builders Declare YouTube channel. So that's another place if you want to rewatch and go over again what was said today. Now, just for those, for what's coming up. So at the moment, because we've been under COVID, we've really just been concentrating on webinars, and we do have another one coming up in December by David Baggs, who well, was one of the leading instigators of EcoSpecifier and Global Green Tag. For those people who don't know those databases, they're fantastic sources of good sustainable product in the Australian context. So you might want to check those out. But he's going to be talking about how to choose low embodied energy building materials, and really from a holistic life cycle analysis point of view, I think. He's a certifier for environmental product declarations as well, which people should be looking at when you're choosing products. That's another source of information to find and to compare one product against another as far as their embodied energy and other environmental footprints. So that'll be a fantastic webinar to check out. So look out for that one. We're also hoping once COVID finishes that we can start having some get-togethers, so that we can maybe sit around, have some sort of panel discussion, maybe drink a few drinks and just socialize a little bit more and just answer questions and really swap information about what's people have been finding works and what products don't work, and really just shoot the breeze. So look out for that once Dan tells us we can start talking to each other without masks and things again. Next year as well, I'm looking to put together a webinar on where buildings fail and how to build tight with standard building construction techniques. So yeah, look out for that as well. Now, for those members who've had some successes or even some failures and want to let us know about it, it'd be nice you can send your information to, we've got a new media correspondent, I guess, Susie from Sanctum Homes, and I'll put her email here just down in the text. That's a great source if you really just to share information. If you haven't already checked out Builders Declare Facebook and Builders Declare Instagram, check out those, because often members are sharing interesting bits and pieces, but we'd really like to highlight some of the work of some of our members to really show people what Builders Declare members can do. So feel free to hit Susie up and give her some pictures and a little bit of a blurb about things that you found work, or projects that you're really proud of, or things that you found were terrible and for others to stay away from. All right, so that's about it. Lastly, for those of you who haven't already joined Builders Declare, we're trying to get the numbers bigger. The more people we can have on the list, the more influence we can have. So feel free to go to the Builders Declare page and sign up there. And that's it, everybody. If you do have any questions, you can always email them to info@buildersdeclare.com. Otherwise, have a fantastic night, and I'll see you in the next webinar.
Thanks, Jeremy.
Thanks.
See ya.